traders, Greg here with a market update. Okay, so we are getting some moves in the currency market. The yen has been the biggest mover. The yen's actually been the best performing currency in the G10 actually so far this year in 2025. The yen's up almost 5%. So look, there are some very good solid reasons, fundamentals why the yen is big. And the first one, and the biggest one, is the fact that the BOJ is hiking rates and will continue to hike rates. And it is the only central bank globally that is hiking rates. So that is a big deal. The reason why the BOJ is hiking rates is quite simple, is that the economic data now warrants it. One of the things that has been lacking in the Japan economy is that they've had no GDP growth, and they've also had obviously no inflation. Now they've got both. On Monday we saw with Japanese quarter 4 GDP for last year, Mark was expecting that to be up 1%. That came out at a whopping 2.8%. So a fantastic number for Japan. And also those inflation now has been sustained above 2%. So yes, look, they are hiking rates. Now with the yen, yes, being long yen certainly does hurt. For your swap fees, overnight swap fees, but there is a way to express long yen without getting hurt with the swap fees, and that is being short Swiss yen. That trade is something that also makes a lot of sense as well, because the Swiss National Bank will be cutting rates potentially down to zero while the BOJ raises rates. So short Swiss yen, you're paying very little swap fees, and it technically and fundamentally looks like longer term can be a good trade. And again, it's a great way to express a long yen position. Look, the other currency that's moving at the moment is the Aussie dollar. We are over 2.5-month highs, above 64 cents now. Yesterday, locally here in Australia, we did have some great employment data. Mark was expecting a headline number for that to come out at around 20,000 new jobs added, and that actually came out well above expectations, double that number at 44,000. And the good news about that number is that that was all comprised of full-time employment. So a fantastic number here in Australia. And it also vindicates this week when the RBA met and they cut rates, but it was a hawkish cut, so they're not interested in following that up quickly. And certainly, with strong economic data like that, it basically, again, it vindicates the RBA for being on hold for the foreseeable future. Look, the other big thing that really is happening in the currency space, that is helping obviously the Aussie and helping the yen, is that we are seeing some broad-based US dollar weakness. The US dollar end of last year and beginning of this year was on fire. The big reason for that was what was happening in US bond yields, like US 10-year yields, did go up and make a new high beginning of mid-January, up around 4.8%. We are now trading at least 30 basis points lower on those 10 years, around 4.5%, and certainly, we haven't seen much action other than just sideways, trading for those bond yields. So look, that's been a big help. The other thing is the US dollar did get a lot of traction on the back of the market being scared about Trump's tariff policy. It seems as if the market is a little bit more okay with that at the moment, not as scared as what they previously were with that tariff policy. So yes, we are seeing some broad-based US dollar weakness. Okay, other markets that are worth noting is obviously gold. Yes, once again, new record highs for gold, above 29.50 overnight. So it is trending still exceptionally well. Look, there has been a lot of noise in the market about that there are some physical shortages of gold, potentially with central banks not having the gold that they are supposed to have, and we're actually seeing that Trump and Elon Musk are going to be going to Fort Knox to check on US gold to make sure that all the gold that's supposed to be at Fort Knox is there. So look, that is something that is worrying the market, that potentially there is a physical gold shortage, and banks and central banks are scurrying, trying to secure as much physical as possible. Silver also just worth noting is that it has been obviously underperforming gold. It has had a couple of attempts now above $33. I'd imagine, look, if it does break above around that 33.50 area, the silver bulls will make a charge for those 2024 highs around $35. And no doubt a break above there would be very technically positive. Okay, there's not much on the data front to end the week. We do have in the US some services PMIs, but look, the other headlines that are probably worth noting, and I'm sure we're going to get lots more over the weekend, is what is happening with all the talks with ending the Russia and Ukraine war. So I'd imagine, if some stage we are getting closer and closer to, some sort of deal being made, we will get some market moves on the back of that. Maybe some softening in gold short term. Obviously, crude would be lower and euro would be higher. But anyway, listen, I hope you have some good trades to end the week. Enjoy the weekend. We'll catch back in with you shortly.